We've got an earnings alert on Rivian, the electric automaker, tumbling after its report. The conference call is underway. Let's get to Phil LeBeau with the latest. Phil.
Melissa, the shares are tumbling because this was really an unimpressive report when you look at the fourth quarter. A miss on both the top and the bottom line. The company losing $2.43 a share, more than was expected, with revenue coming in shy of expectations, coming in at $54 million. And then when you look at the numbers within the numbers, yes, the number of reservations has increased from 71,000 up to 83,000. But in terms of what they produced in the fourth quarter, it was maybe a little bit light of what they had given in previous guidance, producing just over 1,000 vehicles, 920 deliveries. And then there's the guidance for 2022. And this is really where the stock got hit, producing 25,000 vehicles, even though they say they have the capacity this year to build 50,000. Why? Supply chain constraints, specifically with semiconductors, wiring harnesses, electronics. They're talking about that right now in the call. And a loss of $4.75 billion. Here's CEO RJ Scaringe during the conference call talking about the supply chain.
The challenges our suppliers are facing vary and include company-specific production issues, COVID-related delays, and semiconductor allocations. We're working closely with any of these constrained suppliers to identify component challenges early so that we can support the supplier ramp and develop alternative solutions if needed.
The capex for this year will come in at $2.6 billion, and the company is ended the year, I should say, with $18.4 billion. Two final notes, Melissa. The first one, they will be naming a COO next week. And the second one, remember the whole pricing snafu, if you will, last week when they said, hey, we're going to raise the prices 17 to 20%. They did see cancellations. They're not giving a number, but of the people who canceled after that was announced, half of them then came back and reinstated, and they now say that the level of reservations, the pace of reservations, is the same as what it had been in the past. So they do not believe that will have a long-term impact.
They've got bigger fish to fry than this reservation snafu thing. Phil, thank you. Phil LeBeau. Dan Nathan, what's up with this stock? It came out of the gate as the hottest thing around and has just disappointed at many, many turns at this point.
Yeah, I mean, obviously a pretty immature, inexperienced management team, and they obviously have tons of competition coming online. So supply chains are one of their biggest issues. I mean, we know that Tesla made and shipped 1 million cars last year, and they're getting good at it or getting better at it than from these periods. So, and then we know that the Germans are trying to secure all the same parts and everything like that. The Detroit is trying to do that. The Chinese. So they're going to have a tough road to hoe. And I'll just say one other thing: with this stock down more than 80% from the highs post IPO, this is how bull markets end, people. At
the same time, I'm going to venture to say this. They name a COO next week. It's somebody with experience. It's somebody from Amazon. It's some name, and the stock could snap higher, Guy.
Just on a short covering bounce.
Yeah.
With no, I mean, the stock could go up 30% and still be in this downtrend that we've talked about. I mean, it made no sense at 180. Probably doesn't make a lot of sense at 50. And my sense is it will start to make valuation sense in the mid-20s. I think it's going there. But to your point, Melms, you could see a mind-ripping, mind-numbing rally on the back of that next week.